What's going on, everyone? D. Anthony here with Evolution Traders. In this video, we're going to go over the two setups that I think any trader, even if you're a beginner trading futures, can become profitable in under 30 days, right? So again, it's not just a strategy. There's a million different strategies out there. You don't have to use mine. You don't have to trade the way that I do. But if you can control emotions and you can control risk management and you can become really, really good at losing, meaning we're not blowing up accounts on any given one losing trade, right? We're managing them like the way that they should be managed, like proper adults, right? So with that being said, we're going to look at the 5-minute time frame. We're going to look at the NASDAQ 100. Now, just to kind of recap, yesterday we had a big day, right? Range really expanded yesterday. We broke out of that 7-day distribution where we were consolidating up against the linear regression supply on the daily time frame. And yesterday we broke out, right? And essentially we didn't even have a downtick yesterday. It was very, very easy to kind of ride that trend. Again, if you kind of missed it and it took off without you, then you were kind of, either looking to short, which was not a good idea, or you kind of just had to sit on your hands and just let the thing go, right? So today we pulled back a little bit, completely normal, completely healthy, especially when you come out of a range, right? It's not like we gave up all of yesterday's gains. It's not like we took out prior week's lows. We didn't do none of that. Perfect price action for the move that we had yesterday, and today also provided some areas to get in and make some money on some trades. So if we look at the chart, we've got the yellow line, the 200 SMA. We've got the purple line, which is a 20 SMA. We've got these black lines, which is a linear regression. And we got my dotted lines, which is the first hour opening range. So between 9 a.m. and 10 a.m. Eastern Standard Time, I want to see that opening range. And that's going to kind of dictate, do I want to kind of trade in the middle of it? Do I want to wait for a breakout or breakdown? And it's going to kind of shift my bias for my scalps, okay? So for example, if, we have a potential short setup, but we haven't taken out the first hour lows, maybe I'm a little bit more standoffish to take that and kind of just wait for the bounce and vice versa. So the first setup that we had came at 6:45. Again, I'm located in California, so my charts are going to read in Pacific Standard Time. At 6:45 in the morning, we got a 14.5 point range candle on the NASDAQ. Now, this one is going to be a little bit tricky because if you are a scalper where you're looking to grab a handful of points, then maybe you're in and you're out. If you're someone who's trading a little bit smaller size and you need a bigger move, you need 10 points, 15 points, 20 points, 30 points, then this trade could have easily shaken you out a little bit. And again, I want to give you guys some of my notes, right? That are in my rule book, that are in my playbook. I always use the reason why low, any close below that as a stop. Now, again, you're going to notice that this candle wicks below the reason why, okay? There's a couple of reasons why I always use a closing candle. Am I going to give up more than 14 points if we close below it? Sure, right? But what I'm looking for is that added extra confirmation, okay? And I'm not going to get absolutely destroyed if I give up some more points on that stop loss because I'm not trading out of my shoes, right? I'm not, over leveraging myself to where one trade, if I take an extra 10-point loss, is going to be the end of my, the end of my world. Also, we haven't taken out the low of day, right? So that's going to kind of act as two confluences. Did we close below this reason why, yes or no? And did we close below the pre-market lows, out overnight session lows? Did we close below this low of day, right? Which at this time is the first hour lows. No. So I'm not looking to short and I'm not looking to get shaken out of my position. Now, if you were in this position and you're trading properly, then you could have withstood this. This is about a 30-point range candle here. So you're going to lose around $60, or you would have been in drawdown around $60 per one micro contract. Give or take, you could have been up or down $100, $200 at one, or down $100 or $200 at any given point in time on this move. Now, again, you have to trust the charts and you have to trust your strategy and you have to trust your own self, right? At the end of the day is what it's going to boil down to. Because the next setup that we're looking for is that breakthrough or breakdown below the first hour opening range. And you can see here at 7:20 a.m. Pacific Standard Time, not only do we test, we start to break it at 7:25. And what is the rule? What's the rule? We talk about this a lot in Evolution Traders. We need confirmation, right? So if we have this level, let's call it a pivot. If we have a pivot here, we're looking for the pivot to get broken, and then we're looking for it to do something else. It needs to go sideways, it needs to back trace, or it needs to confirm that new high. So that new high is sitting here at 725. We don't confirm that new high until 740. This is your full send go. You should be all in on this setup through the opening range. You're going to use a previous 5-minute candle as a stop, okay? Or you're going to use a 20 SMA as a max paint. One or the other. You can see the first pop put in a lower high, or excuse me, a higher low, and then we came up and tested the first hour range, and we pulled back for 2 candles, and then we shot up and exploded. I don't even need to explain how many points you could have made there. You could have pulled up your charts and look at it. Now, where do you know where to take charts or take some profits off, right? Based on looking at the charts. Well, this linear regression, right? If that's the next supply zone on our 5-minute time frame, we want to make sure we're cleaning up that position into that supply. Now, we break through, right? We get that break through the linear regression. But again, anytime you're at the top or the bottom linear regressions, you tend to see reversals, okay? And when you see those reversals, you need to be a little bit cautious. It's not full send, it's time to go. If we're going to continue to run, what we need to do is pull back to the 20 or pull back to the original breakout spot, which is the opening range. So either we pull back here and then we go ahead and take out the highs, or we let it go because we never take out the highs. So it's very, very simple. It's not like you let it break the linear regression and then you shoot on the next, on the next one without any back test. You get a 20 SMA set up here. The range is 30 points. I don't even need to add this up because you can see here, doesn't even confirm until how many minutes? This is 30 minutes later. This 20 SMA play confirms 30 minutes later and then kind of bounces against you, goes back over the 20, but never takes out your reason why. So it never closes above this. It never takes out a prior swing high. The range on this is 30 points. So again, when you're playing with the NASDAQ, you're playing with out in the wild, wild west. Okay. Your stop loss, truthfully speaking, on a 5-minute time frame can be anywhere between 15 and 35 points, right? Sometimes a little bit more, but you can always, either size down or cut the range in half. But if you're looking to put like a 5, 6, 7 point stop loss, you better be trading like a smaller time frame, right? Because each individual candlestick here, you can see this is an 11-point candle. This is a very small candle here. It's a 10-point candle. This is a 13-point candle, a 28-point candle, a 14-point candle, a 12-point candle, 11-point candle. What is the point that I'm trying to make here? If you're trying to trade and you're trying to scalp the NASDAQ and you're trying to put a 5-point stop loss, you're trying to put a 6-point stop loss, you're trying to put an 8-point stop loss, a 9-point stop loss, what are the odds you think you're going to get stopped out in that single candle that you enter into? I mean, think about it, right? This is not rocket science here. I see it all over social media where people say, I've got a 12-point take profit or a 14-point take profit in a 6-point stop loss. I want 2 to 1. Guys, open up the stop loss a little bit, size down, and let the stock work, right? I want to stress to you guys need to let the charts play out. So many times, so many traders are so eager to just, as soon as they click buy or sell, they want it to just go straight into profit. Guys, this is the NASDAQ. You're not trading the Dow. You're not trading the S&Ps. You're not trading, you're not trading crude oil. You're not trading nothing else. This is the wild, wild west. If you don't like it, go trade something else. The only reason people like to trade the NASDAQ is because it moves 20, 30, 40, 50 points. It's nice when it's 30, 40, 50 points in your favor, but when it's not in your favor, you tend to get your panties in a bunch, okay? I hope that makes sense. That play obviously works. You got another short setup here. That confirms on this big engulfing candle here, lost through the 200. That play also works as well. This candle here is a 61-point range candle. On things like this, if we do confirm, it's really tough because, what you would essentially be doing is giving yourself a 60-point stop loss, which is $120 per micro contract. And let's say we only go down 10, 15 points, you're only gonna make to like $20, right? $30. It's not that much. And you're gonna have to have your finger on the trigger. I like to just cut the range in half, right? And I tell myself this, if this is a 61-point candle here, I don't want to give myself 61 points. How about if and when we confirm, okay, I use something else like the 20 or the 200, right? If the 20 is going to be a level of supply, this is resistance, and the 200 is resistance, and the first hour highs is resistance, then how about I tell myself this? If this confirms and we close over the 20, 200 or first hour highs, I get out. Simple. And if it stalls, which this trade obviously stalled for a long time here, almost over an hour before it actually started to flush into the close. At this point, I start telling myself, I just need to get green and get out. Okay. I'm not one to sit here for 2, 3, 4 hours. Okay. Now, when I say let the stock move, I mean let it breathe for 5 minutes, 10 minutes, 15 minutes, 20 minutes. But I don't mean sit on the same trade if it's not working for you for 3 or 4 hours. You get what I'm saying? So if we were going to get into this trade here, the short position through this middle linear regression in the first hour lows, then when we get in, right, when we get in, you're immediately going to sit through from 11:15 all the way to 12:05. You're sitting in almost an hour's worth of drawdown. Not a lot of people can stomach that, including myself, right? So if you're managing your risk accordingly, then yeah, it's going to suck to sit there and draw down. You're going to be a little upset. You're going to get a little anxious. But for me, I like to tell myself this: the market sometimes, okay, 60, 70, 80% of the time, sometimes it gives us that second opportunity to just get the hell out for scratch, right? Or get the hell out for a small loss. So in this particular situation, when we get into this play here and it starts coming up and then it's driving you nuts, and then as soon as we start to break through and put a new low, I'm just going to get out, and it's going to be a break-even trade, or it's going to be a small win. But I'm not going to take a loss on it, right? Because again, I've got a max pain, right, which is going to be over a previous swing high, or you're gonna just break even or scratch. Again, you get a little bit of a setup here back down to the downside, and then this play would have worked out. You get a trade set up to the long side, doesn't really confirm. This one confirms 10 minutes later. But again, best price action today? No, right? No. But guys, you're coming off of a monster move. I mean, let me just pull out the daily chart, right? So if you look at yesterday's price action, guys, it was a 314 point range. Today's range was only 127. So from high to low, we're talking about 127 points. So we're basically finished on an inside bar day, meaning we didn't close above yesterday's highs and we didn't break down yesterday's lows. So what I'm looking for tomorrow, okay, what I'll be looking for tomorrow is if we can continue to back test, right? I would like to see a little bit of a break and retest, right? Which we broke out of this distribution. If we pull back and then we consolidate, right? Let's say we tag that tomorrow, and next week we start pushing higher, right? We start pushing higher next week. Guys, I'll be looking for the bounce, okay? I'll be looking for the bounce next week, and then going to use this linear regression on the daily and this swing low, wherever that does decide to pull back to, as a max pain stop, and that's going to be my gauge. I'll be long bias unless we take out that swing low. And if you look at it from the top side, let's say, for example, we never get down there, but we do pull back a little bit and it starts pushing up. Anything over today's highs is a full send go. Okay. We've already taken out the, all-time highs here on the NASDAQ. All I'm looking for is 18,760, and that's going to be my full go. Hope you guys enjoyed the video. If you guys want to trade with me, that link's down in the description box below. All of you evolution traders, I'll see you guys in the room tomorrow. And to the rest of you guys on YouTube, I'll catch you guys on the next video.